with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from our investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today. And live secure, live easy.
We know what you want. A little bit of fun. A little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
If you save, pay, borrow, invest, or insure with NCB, now it's time to own a part of the NCB Financial Group Limited in its additional public offer. For as little as $6,500 in the general pool, you can own shares in the business built on strong performance and making life better for all Jamaicans. Invest in our future. Invest in your future. Offer opens May 6 and closes May 27. Apply for shares at goipo.jncb.com. Conditions apply.
In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself.
Opening an investment account on GoIPO is easier than before. Using your NCB online credentials, simply log on to goipo.jncb.com to provide the required information. Our digital biometric identity verification system will confirm your ID instantly, so your account will be opened in minutes. Plus, now you can open your investment account with up to 3 joint account holders. So build your wealth and experience life with NCB Capital Markets.
The way you've built your career into a masterpiece, so you can have days that look like a work of art, will be the legacy that will live on as your crowning glory. Now let us help put the finishing touches on your brilliance with Clarion's vast experience, deep expertise, and digital tools, all focused to give you what you deserve. The finest things in life.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from our investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today. And live secure, live easy.
We know what you want. A little bit of fun. A little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
If you save, pay, borrow, invest, or insure with NCB, now it's time to own a part of the NCB Financial Group Limited in its additional public offer. For as little as $6,500 in the general pool, you can own shares in the business built on strong performance and making life better for all Jamaicans. Invest in our future. Invest in your future. Offer opens May 6 and closes May 27. Apply for shares at goipo.jncb.com. Conditions apply.
In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself.
Opening an investment account on GoIPO is easier than before. Using your NCB online credentials, simply log on to goipo.jncb.com to provide the required information. Our digital biometric identity verification system will confirm your ID instantly, so your account will be opened in minutes. Plus, now you can open your investment account with up to 3 joint account holders. So build your wealth and experience life with NCB Capital Markets.
The way you've built your career into a masterpiece, so you can have days that look like a work of art, will be the legacy that will live on as your crowning glory. Now let us help put the finishing touches on your brilliance with Clarion's vast experience, deep expertise, and digital tools, all focused to give you what you deserve, the finest things in life.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from our investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today. And live secure, live easy.
We know what you want. A little bit of fun. A little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
If you
Now let us help put the finishing touches on your brilliance with Clarion's vast experience, deep expertise, and digital tools, all focused to give you what you deserve. The finest things in life.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information,
basically cost to income ratio of close to 80%, are similar to what they were last year. So the question is, how will we make sure we repeat that record from 2002? Actually, today, you see, we have a much better better platform than we did in 2002. Because today, you see, if you were to blue sky for a moment and think about it, suppose you're given the opportunity to design the perfect financial institution. What would you design? What would your design format look like? Well, I'd suggest to you that it would include a major banking institution with scale. I would suggest to you that it would include a major insurance institution, again, with scale, life, health, and property and casualty. I would suggest to you that such an entity would be a great one-stop shop for governments, corporates, and the individual. So that would be the ultimate financial institution. And guess what? We have it here at NCBFG. You see, the financial institution that we have provides our clients all of those services. So our clients, whether you're a government, a corporate, or an individual, you don't need to go anywhere else because we have the scale to support all your needs. But those banking and insurance products are really commodities. And as commodities, we have to make sure that we are the lowest cost producer, because the winner in any and every commodity business is the lowest cost producer. And hence, it's critical that we get our cost income ratio down to at least the mid-50s. And with the scale, we certainly will be the lowest cost producer and be able to deliver now the value add, the true value add, which is creating wealth for our customers. That's the true value add. All other banking services and insurance services are basically commodities. So let me now elaborate on how we're going to win and repeat our track record from 2002. You see, the first attribute that we have is scale. NCB has 2.2 trillion in assets. It is equivalent to the top 8 Jamaican businesses listed on the JSE. So we have scale. NCB has market leadership. In terms of assets, we're 38% of the assets in the Jamaica commercial banking sector, 38%. In terms of scale, in Trinidad, we have a Glock Guardian Life of the Caribbean has a 39% market share of the gross premiums written. And GGIL has a 26% market share of gross premiums written in the property and casualty space. So we have scale. How are we going to get to that point whereby we can certainly be the lowest cost producer and deliver the cost to income ratio? Well, our revenues are generated from diversified business segments. All the business segments within financial services. We're also diversified geographically. We're in 22 countries. And we are very dominant in banking in Jamaica, as I mentioned, and in insurance in Trinidad. And if we're not number one in other markets, we're a close number 2. Thirdly, we have resilience. We have been through a lot over the last 187 years. And we're still fresh today because we continue to evolve, learn and evolve. We're a learning organization. Now, in addition to all of those features, we have global recognition. And National Commercial Bank was recognized by Globe Finance as the safest bank in Jamaica, awarded for 10 consecutive years. the safest bank in Jamaica, awarded for 10 consecutive years. It was awarded the best bank in 2023, best private bank in 2024, the best FS bank in 2024, and the bank of the year in 2023. So we have international recognition as being the best for 10 years running. Now we talk about potential. I'll just give you an example of one potential that is to be tapped. Did you realize that over the last 10 years, the annual compound rate of return delivered by our pension fund management team is 11.4% annualized compound? So what that means, if you had invested if you invest $1 million at 11.4% for 40 years, it's 75 million. Same million invested at 10% for the same 40 years is around 65 million. At 5.4%, it's 8 million. So there's a huge difference between 11.4 and 5.4. So that's a huge untapped market that we have not capitalized on. And we have also the accolades to prove, because from 2015, NCB Insurance Agency, the pension fund management company, was voted by World Finance as the best pension fund manager in the Caribbean in 2015, 2016, 2017, 18, 19, 20, 21, 22, and 23 for 9 consecutive years. 9 consecutive years. NCB also, we realigned our board, and we now have a more acute focus on governance. We also have leadership that would be described as owner-operators and investors, which is the ultimate when it comes to leading an organization. Because the owner-operator has a perspective that this business has to be a great investor for investors, but it also has to be run efficiently and deliver the best customer service. So the management that you now have here, the leadership that you now have here, is a combination of owners, operators, and investors. We have best-in-class management. As you can see, when we turn it on, you can see the cost-to-income ratio went from 80 to now, it's now trending 66 and down. So I'm proud of what our management team has done over the last 6, 8, 9 months. And as you know, you've seen us in the marketplace. It was music to my heart 2-3 weeks ago when 320 of us came from head office, the atrium, and we fanned out into Kingston. We visited the police station, we visited the Coronation Market, and just being with our customer. That's the new NCB. So, NCB today is focused, as I've said before, over the last 2 or 3 quarters since our return, on efficiency, governance, and customer experience. And for that, I can attribute the 6 months return that you have experienced, and which will be elaborated on in this meeting. So I just want to turn the microphone over now to Mr. Malcolm Sadler, who will expound on what we have done over the last 6 months and the last 3 months. Thank you very much.
We're not hearing
overall net
Malcolm.
profit of 1.6 billion and a loss attributable to our shareholders of 2.1 billion. We took certain actions in Q4 that had a negative impact on our performance during that quarter. Earnings per share for the quarter was negative 0.92. Return on equity was negative 4.78%. For the full year ended September 2023, the group recorded a profit of 15.3 billion, the lowest in over 7 years. As of September 2023, there were also concerns that we were yet to declare a dividend after more than 2.5 years. The last dividend at that point was in 2021, and the share price was suffering. On top of that, there were concerns in relation to the expected impact of the implementation of IFRS 17 and Basel III. These concerns were understandable if you were only focusing on the current situation. However, the two largest subsidiaries of NCBFG, National Commercial Bank Jamaica Limited and the Guardian Group, have been around for close to 200 years. Dealing with uncertainties and resetting is a part of our DNA. We do what we need to do, and we succeed and become stronger. NCBJ is the number one bank in Jamaica, and Guardian is number one in insurance in Trinidad. NCBFG is the number one financial group in Jamaica and significant in the Caribbean. We remain number one by doing what we need to do to succeed and become stronger. Resilience is the word. We made a commitment to reset after September 2023, and we're on track. We're off to a good start for this year, with improvements in our key financial metrics for the 6 months to date. Consistent with our stated priorities, we have accomplished the following so far. Since September 2023, we have made 2 dividend payments of 50 cents each. At yesterday's board meeting, another dividend payment of 50 cents was approved by the board for shareholders on record as at May 27, 2024, for payment on June 10, 2024. There was only 1 dividend declared since the start of the pandemic up to September 2023, and now we have 3 so far for the current year. Our efficiency ratio, that is our cost-to-income ratio, is one of the measures of the progress we have made, and it has steadily improved from 82.54% in September 2023 to 73.93% in the first quarter of this financial year, December 2023, and 66.68% for the March quarter 2024. The ratio for the half year is 70.45%, an improvement from the comparative prior year ratio of 78.69% and 8.24 percentage points decline. And a decline is a good thing here. These results are due to increased revenues and cost reduction activities. Our increasing profitability has resulted in improvements in other key metrics, specifically return on assets, ROA, improving to 1.22% from 0.67% in the prior year, and return on equity, ROE, increasing to 11.18%, up from 7.40% in the prior year. We have continued our focus on capital recalibration and capital efficiency. This has resulted in a reallocation of capital within the group. We have also launched an additional public offering of shares, APO, which opened on May 6. Rob, our group CEO, will share more details on the APO and also on how we have progressed as a group over the last 6 to 9 months. I will now share highlights of our recently released unaudited interim financial results. Note that there was a restatement of the prior year's net profit in accordance with the adoption of IFRS 17, which impacted our insurance segment. The group reported consolidated net profit of 13.7 billion for the 6 months ended March 2024, representing a 98% or 6.8 billion increase over the prior year. The consolidated net profit of 13.7 billion for the 6 months is almost at the level of the net profit for the entire 2023 financial year under IFRS 4. Consolidated net profit attributable to shareholders of the parent was 8.7 billion for the year, representing an 89% or 4.1 billion improvement over the prior year. The profit attributable to shareholders of 8.7 billion is already ahead of the full year profit attributable to shareholders in the prior year of 7.6 billion under IFRS 4. Operating income of 65.3 billion increased by 17% or 9.4 billion. 4 of the 7 business segments reported improved results, with the life, health, and pension segment accounting for the largest increase. Details on the segment performance will be provided later in my presentation. Net revenues from banking and investment activities of 40 billion experienced a modest increase of 817 million or 2% over the prior year. Improved net fee and commission income and interest income were the main drivers, primarily resulting from growth in the loan and investment portfolios, as well as increased transaction volumes. During the quarter, we have focused on net interest margin, NIM, preservation strategies as asset yield increases continue to lag the pace of increase of the cost of funds. The revenue improvements were tempered by higher credit impairment losses and lower gains on foreign currency and investment activities. Net revenues from our insurance segment was 25.2 billion, reflecting an 8.6 billion or 51% increase compared to the prior year. The increase was primarily attributable to 1, a non-recurring gain of 3.3 billion on adoption of IFRS 17 related to the redesignation of certain financial assets. 2, unrealized gains from equity investments also positively affected the net results. 3, additionally, there was increased net insurance service result in our life, health, and pension portfolio. Operating expenses of 47.9 billion increased by 2.1 billion or 5% over the prior year. We continue to assess our immediate addressable spend to optimize and drive efficiency across all business lines. The combination of increased revenues and moderate growth in expenses have resulted in an improvement in the cost-to-income ratio to 70.45%, and that's for the 6 months, down from 78.69% in the prior year. The group's improved profitability, in turn, contributed to an improvement in ROA and ROE, as highlighted earlier. I will now briefly discuss the performance of our business segments. Our life, health, and pension segment generated an operating profit of 15.5 billion, reflecting an increase of 9.7 billion or 169% in net insurance activities. This was primarily as a result of increased revenues from various product lines, including annuities, traditional life, and group life insurance products, together with the non-recurring gain upon adoption of IFRS 17. Our treasury segment, our highest banking contributor, reported operating profit of 6.3 billion, increasing by 42% compared to the prior year, mainly due to improved net interest income resulting from growth in the investment portfolio. General insurance recorded operating profit of 3.2 billion, a 1.2 billion or 27% decline compared to the prior year. This segment experienced higher insurance service expenses, along with higher expenses from reinsurance contracts in the property and casualty portfolios. Operating expenses also increased by 10%. Corporate and commercial banking reported net results of 3.1 billion, a marginal decline of 71 million or 2% from the prior year. The decline was mainly due to increased costs of funds. The wealth, asset management, and investment banking segment recorded operating profit of 1.2 billion. That's a 66% or 2.3 billion decline when compared to the prior year. There have been reduced trading opportunities for equity and fixed income market instruments, as well as fewer investment banking deals. There was also continued interest rate pressure impacting cost of funds. The payment services segment reported net results of 1.4 billion, reflecting an increase of 1 billion or 279%. This segment includes our card acquiring and card issuing businesses, as well as our mobile wallet Link. The increase was driven by a reduction in operating expenses, primarily related to Link's maintenance costs and card-related expenses. The segment's results were also positively impacted by an increase in net fee and commission income due to increased volumes. In relation to Link, Link is now being managed by the bank and is benefiting from the synergies. I was asked the question recently, where is Link now? Link is still here and is now a more efficient operation. The consumer and SME banking segment recorded operating profit of 658 million, an improvement over the loss of 540 million recorded in the prior year. Collectively, increases in net fee and commission income and net interest income of 613 million and 519 million respectively contributed to the overall improved profit in this segment. These gains are primarily fueled by an expanding loan portfolio and improved net interest margins compared to the prior year. We will now briefly discuss key components of the consolidated statement of financial position. Our asset base now stands at 2.26 trillion, an increase of 147.2 billion, or 7% over the prior year, driven primarily by increases in our loans and investment securities, including pledge assets and reverse repurchase agreements, with a combined increase of 106 billion. Shareholders' equity increased to 199.1 billion, up by 19% or 32.1 billion from the prior year. Shareholders' equity attributable to our stockholders was 160 billion, a 21.7 billion or 16% increase over the prior year. Net loans of 633.1 billion increased by 6% or 38.1 billion over the prior year. The increase resulted from growth in both our retail and card portfolios. Customer deposits grew to 754.7 billion, increasing by 6% or 40.2 billion over the prior year. Insurance and reinsurance contract liabilities increased to 523.2 billion from 507.4 billion, a 3% or 15.9 billion increase compared to the prior year. Investment contract liabilities of 47 billion also increased by 4% or 1.6 billion. In relation to capital, Basel III is not yet implemented in Jamaica. However, based on our assessment, National Commercial Bank Jamaica Limited would be fully compliant if it is implemented today. Looking at our capital position under current regulations, we continue to be well capitalized, and our liquidity and capital ratios are all above regulatory requirements for our individual regulated entities in Jamaica, Trinidad and Tobago, Bermuda, countries in Dutch Antilles, and all other countries and territories in which we operate. We operate in 21 countries. In closing, I extend my gratitude for the exceptional contributions of our team. Your continued dedication and resilience have been truly admirable. I thank our valued customers, current customers, and future customers, our shareholders, current shareholders, and new shareholders that will come through the APO, and our various stakeholders for your continued loyalty and support. We're committed to providing the highest quality of service to our customers and returns for our shareholders, and we look forward to continuing to serve you. I will now hand over to our Group CEO, Robert Almeida.
Great, thank you. Thank you so much, Malcolm, and good morning, everyone. Thank you so much for joining us today as we review our Q2 results. I always find that so many numbers to go through. I'm always impressed when Malcolm goes through all those numbers. So we believe the quarter is a pretty good reflection of where we are in the journey on which we embarked on during the quarter and during the first half of this year. As you know, in July 2023, we initiated a new course at NCB Financial Group that was focused on efficiency, governance, and customer experience. In February of 2024, I highlighted to you some of our early achievements, namely, reduced expenses. We had delayed the organization to bring us closer to the customer. We had reallocated capital to improve capital efficiency. And we had announced the divestiture of NCB Cayman Limited. We had declared a dividend of 50 cents per share for the second consecutive quarter. Now, we announced all of those things 3 months ago, and at the same time, I outlined a high-level strategy which was focused on being brilliant at the basics, and in so doing, unleashing the power of the scale of our platform to refocus the conversation on creating wealth. Finally, I provided you with some simple target success measures, so you could hold us accountable and actually help us out by keeping us focused. We tend to find that if we can actually tell others what we're going to do, what we aspire to do, they can then hold us accountable to achieving those targets, to meeting those standards. And so that our entire stakeholder environment, our entire stakeholder ecosystem actually helps us in driving and making sure that we actually do all the things necessary to hit our aspirations. Among those items were a cost-to-income ratio of 60% or lower, a return on equity in the mid-teens, consistent dividend payments growing towards a 50% payout ratio on earnings, improved customer experience metrics, and sustainable growth. Now remember, this is where we want to get to. We aren't expecting to be there just quite yet. In the quarter ending March 31st, 2024, we continued to execute against our strategy, and the numbers are telling us that we're on the right track. As you heard, we experienced reasonable top-line growth, our cost-to-income ratio declined, and the combination of those two things created some multiplier effect on profit growth, as you heard from our chairman earlier. Our return on equity increased, and we declared a 50 cents per share dividend for the third consecutive quarter. Our chairman, as he referenced, has been leading by example in our commitment to get closer to our customers. This has included our executives and staff members participating in town halls and other interactions with customers in the branches, in the streets. Our employees are our number one asset, and we are working hard with them to ensure that all 5,000 plus of them adopt what we call an owner's mindset. A mindset where when you make decisions and you take actions, you should do them as you would if you were also the owner of the consequences. So there is no separation between the person making the decision and the person realizing the consequences, at least in their minds. They think, every one of us thinks that way, that says, if I'm going to reap the benefits or the costs of my decisions, would I still make the same decision? Another way of saying it is, do to others as you would have them do unto you. Other items, achievements in the quarter. Guardian completed its transition to IFRS 17, which is a monumental overhaul of financial reporting for insurance companies, so kudos to the Guardian team. Our focus on our ABM network, the largest in the country, is working as the network achieved peak time availability of 97% in Kingston and St. Andrew metropolitan area and rural areas, and 96% in other urban areas in February and in March. Whilst activity by fraudsters unfortunately continues to increase globally, our education campaigns and other security measures are working, as we are seeing dramatic reductions in fraud incidents. As it relates to governance, we've made a number of changes in our board structures, and these changes are all designed and intended to enhance our framework, ensuring that we have a optimized between independence on the one hand and alignment, better alignment. We have a very complex group across many countries, supervised by many different regulators. And one of the tasks for us is we have to become masters of managing complexity and ensuring independence at the individual entity level and better alignment to realize on the synergies of our group. We are committed to continuous improvement through succession planning and rotation of board members. A fresh set of eyes is so important to keep the organization vibrant, and we've been taking actions to ensure that we maintain and we embed that type of rotation so that we don't have to try and force ourselves to bring a fresh set of eyes. We have some catalysts from the outside that are actually bringing us a fresh set of eyes, and then cause each of us, not only do they bring in a fresh set of eyes, but each of us, when we interact with new people, our perspective changes as well, and that keeps the organization vibrant, dynamic, and alive. Data protection and privacy programs have also been implemented across the group, built on the recognized and in some places legislated standards that are related to the careful and consensual handling of personal protected information of customers, employees, and other stakeholders. This is a really big focus of ours, and it's a big focus of the entire system and a big focus of ours across all of our jurisdictions, because everyone's information needs to be protected. This is just a sample of the activities that have taken place in the quarter and are intended to give you a feel for the activities that we're embarked on and the roads that we are traveling. Change is a contact sport. To be clear, we are still on the journey, and we have to focus clearly on staying the course and on executing our unique strategies. Strategies that capitalize on our competitive advantages, the competitive advantages that we have developed over the last several years. First, the first strategy is to be the low-cost producer by capitalizing on our scale. $2.2 trillion of assets, more than the top 8 companies in Jamaica combined. Economy of scale is something that we kind of like we talk about, it's something to be proud of. More importantly, it's something to be utilized to become the low-cost producer, to realize on the benefits of that scale, and that is one of our biggest strategies. Second is to build and to be the primary relationship with our clients. We'd like to be their primary financial services provider by capitalizing on the breadth of our product offering and our geographic footprint. We are the market leaders in banking, life insurance, health insurance, capital markets, credit cards, pensions, mortgages, home insurance, motor insurance, etc., across all the major markets in the region. most importantly, what this gives us, it gives us the opportunity to bring our customers comprehensive solutions and the convenience of a one-stop shop. Third, our third strategy is to help our clients create wealth. And this our chairman spoke about, saying, kind of like, I don't want to belittle the other rest of the businesses by calling them commodities, but the point being is they are serving basic needs. The aspirational need of our client population is wealth creation. And when we do things efficiently and we bring a one-stop shop to our clients, we have the ability to help them create wealth by combining our proven wealth management capabilities with the rest of that financial services platform. In that context, we launched our APO, which, as you've heard, is open for subscriptions right now. The proceeds of the APO, and whilst the proceeds of the APO will be used for debt reduction, it actually forms only one component alongside profits, divestitures, and capital reallocations that together comprise our funding plan, which is intended to maintain our already strong regulatory capital positions, fund the growth of our business so that we can fund the growth of our markets, reduce debt, and not compromise dividends. The APO provides an opportunity for every Jamaican to participate in the growth that is taking place in Jamaica and the broader Caribbean region through the ownership of NCB Financial Group, a financial institution that is integral to the financial markets in the region. To participate in the profitability improvement that is taking place in NCBFG, the opportunity to capitalize on a subdued equity market at a relatively low NCBFG stock price. And lastly, it provides the opportunity for everyone to create wealth for themselves. In closing, I thank you for your continued support and reaffirm our commitment to building a better Jamaica, Trinidad, and the Caribbean region. I encourage you to join us through participation in the APO and to avoid being a spectator who only watches this wealth creation movie play out. Thank you very much, and I'll pass it back over to Dave.
Good morning, stakeholders, and we will head straight into our moderated question and answer section. We have received a few questions, which I'll quickly now go through. As usual, we will take as many questions as we can within the available time, and where we're not able to respond to questions that we've received, we will provide responses through our investor relations team after our investor briefing. First up, we have a question from Bambi Pusola to, and this is for you, Rob. And you are asked to share more about realizing on the extensive and unrealized expense and revenue synergies created by the acquisition of Guardian Holdings Limited.
Okay, great. That's a really good question. And so let me try and categorize it into two parts, because one part of it is about the cost, and I think there's a focus there on the cost-income ratio. And so one part of our cost-income ratio is actually just realizing, as you've seen in the quarter, we have growth in the businesses and we're able to contain our costs. We get a gearing effect, operating leverage on there, bring our cost-income ratio down, and it has a multiplier effect on increasing profitability. The synergies between Guardian and NCB, banking and insurance, are really valuable to the customer. They're simple, they're not easy. And so very simplistically, it's about, there are times when, so what do we want to do? We want to optimize capital, and we want to optimize labor, and we want to optimize technology. So to do that, you have to kind of create mobility. So you actually want to take all your talent and you want to try and get all your talent to work together, because when the talent all works together, they'll produce a better result. So rather than having fragmented talent, we need to get all of our talent pools that are working in investments or in pensions or in insurance or in a number of things that we do. We need to get all of that talent working together so that we get a multiplier, a compounding effect that when you put them all together, they produce an even better result. And so the word would be teamwork. Teamwork is the most critical thing we need to do to realize on the synergies of the Guardian and the NCB platform. It's a culture of teamwork throughout the entire organization, a culture of collaboration, a culture of cooperation. That is actually what we do. That's what I meant by it is simple, it's not easy. There's other complexities that we have to deal with, the regulatory complexities of different regulatory regimes in multiple jurisdictions. And I would say, I don't want to make light of it, but that's what people like Malcolm and Dave are, that's their expertise in figuring out how we do all of that. But the hardest thing is actually to get everyone to collaborate, to actually make teamwork and make us all feel like one group. That is the hardest thing. Said simple, not easy, but Bruce Bowen and Ian Chinapoo, who run Guardian and run NCB, respectively, have exactly the right attributes and exactly the right personalities to foster those teamwork that is necessary for this organization to bring the one-stop shop for the benefit of the customer to the customer.
Okay, thanks, Rob. We have a few questions here from David Rose for Malcolm. So first up, Malcolm, could you speak to the final raise amount for the bond raises by NCBFG? February 2024, there was a target of US 26.6 million. February 24, 4.46 billion. April 2024, 5 to 5.6. 5.5 to 6 billion.
So thanks for the question, David. So they were all successful, all three. Yeah, they were all successful. Maybe even oversubscribed as well for a couple of them. The most recent one would have closed, I believe, last week or this week. Fully subscribed, that's the 5.5 billion. In excess of 5.5, so we return the excess as well. But to also mention, David, we have been paying down some debts as well during the period.
David, if I can add a couple of things on that. So David, one is the amounts of the debt, and as Malcolm mentioned, they were all successful, and we've also paid down some debt. I took away a few important things from that. There's a number of messages in there. One, a couple of just specific to NCB, and another just about the health of the region in general. First and foremost, doing those refis of those numbers is a strong indication of the confidence that the market, the investor population has in NCB. Secondly, and this is for our team, is executing on those transactions is a very strong, took a lot of work and takes a lot of effort, and it's kudos to the NCB team that executes on that, and it's a reflection of their competence and their capability. And lastly, on the system itself, it speaks volumes to the health and the vibrancy and the strength of the financial system and the financial markets in Jamaica and in the broader Caribbean region. So those are some of the takeaways that I have. I don't want to belittle just the execution. It's important to execute on those things, but those were the big takeaways that I had from those events.
Okay. Thanks, Malcolm, and thanks, Rob. Another question here from David Rose for you, Malcolm. NCBFG's credit impairment provision spiked to 1.89 billion in Q2. He says he recalls the 3 to 4 billion debt write-off happening from NCBJ's audited numbers. Is the increase in credit impairment provisions related to the relative worsening economic environment? Is the question.
No, it's not related well, what you may call worsening economic environment.
I don't know.
Not sure which country you're referring to. But if you look at the non-performing loan ratio, it's still at 4.1% compared to last year. The loan portfolio would have grown since then. So from a quality perspective, the loan portfolio has the same quality as last year this time. That's 4.1% of the portfolio in the non-performing loan category. When you look at the cost of risk in terms of our impairment provisions compared to our gross loans, we're far under 1%. I believe we're at around 0.4% in terms of cost of risk. And we were projecting to be higher. I believe we're projecting to be around 0.9% in terms of cost of risk, and we are far below that. So there have been no deterioration in the portfolio.
Okay, thanks, Malcolm. And then the next one from David for you is NCBFG's debt bill for the for the year at this point is 36.84 billion. He says, I know capital was extracted from 4 subsidiaries in Q1, and you're executing an APO and several debt refinancing rounds. Now, the question relates, though, specifically to NCB Cayman and to the debt management strategy generally. So the Pillar 3 disclosure for NCB Cayman is no longer there, but what is the estimated value of NCB Cayman that would be put forward for the sale, and how is the debt management strategy going? I'm not sure if you can actually answer the first part of that question. So maybe let's focus on how is the debt publicly, I mean. How is the debt management strategy going?
And that's the debt management strategy for NCBFG?
Yes.
Well, it's going well so far. As I indicated earlier, what we have done in terms of those three bonds that you mentioned earlier, David, those would have refinanced. Those would not have been new debt raises. We successfully refinanced those bonds, and as I also indicated, we have actually paid down up to the end of April. We would have actually reduced the debt at the NCBFG holdco level, and as we indicated also in terms of the APO, we will continue to reduce debt, reduce interest costs, and continue to recalibrate in terms of our capital, our debt to equity. So far, it's going at a satisfactory level for us in terms of managing the debt.
All right.
Dave, if I can add that.
Go ahead.
It's important to put this into context. So if you take a look at our consolidated financial statements, you'll see that our capital position is exceptionally strong. So that, I think it's really important to put all this into context. You'll see our capital position is really strong. This business, we talk about the profit attributable to shareholders. This business produces about $25 to about $30 billion of consolidated profit a year. So when you take a look at the debt numbers in the organization, you got to put it in the context of we generate about 25 to 30 billion of consolidated profit per year. When we have that amount of profit generated, then we have a structure within the consolidated entity. The choice is do you leave capital inside of subsidiaries in order to help them? Again, remember, we're meeting all of our regulatory requirements. So now you've got all this extra profit, you get to use it to fund growth, and you get to use it to fund debt reduction, you get to use it to fund dividends. These are all the various choices we have for capital allocation. So when we're saying we've got a desire, we acquired a number of businesses over the last number of years. We did it by raising holdco debt, but at the same time, our consolidated group is very strong from a capital position. we're reallocating, so you'll keep hearing the word, we're reallocating capital through the group, we're raising some equity capital, and we're doing some divestitures, which is just another form of reallocating capital within the group, so that we rebalance it, and in the process, we increase our financial flexibility to take advantage of the opportunities that will present themselves, so that we can continue to fund growth. Again, just got to put that number into context. We generate about 25 to 30 billion of consolidated profit per year, and we use that to fund growth, and we use it to fund dividends. And what we're doing is we're reallocating capital within the group, raising some money in the APO, doing some of the divestitures to lower our holding company debt levels. So it's all in the context of increasing financial flexibility so that we can actually be more opportunistic going forward.
Okay, thanks, Rob. And maybe before I ask the next question for you, Rob, maybe you can comment, as we look at an APO on how, with the application of the APO proceeds, perhaps a significant portion towards debt, if you can comment on that application, how it affects the numerator and the denominator when you think about the debt to equity ratio as well. I heard you speak about it at a staff webinar, and I just thought it would be useful for you to comment on that in this context as well.
Okay, so the math part is relatively simple. So when we raise money in an equity, let's just say that we have, to make the math simple, let's say that day one you start with $50 of debt and $50 of equity, of a total of 100. When we raise equity, if we raise 5, the equity will go up from 50 to 55, and the debt will go down from 50 to 45, because that'll be the use of proceeds. So what will happen is both equity will go up and debt will go down, and so the ratio of debt to equity actually has like the compound effect of the numerator going down and the denominator going up. As I mentioned, the proceeds from the APO will be used to pay down debt. It's about, the target APO is $5 billion. It's in the context of a business that generates about $25 to $30 billion of consolidated profit per year. So we have most of the money that we generate in this business over the next year, over this year, from profits, from divestitures, from capital reallocation, will go to fund growth and dividends. That'll be generated from profits will go to fund growth and will fund dividends. The monies that we raise from divestitures and from the APO will go to pay down debt. The combination of that allows us to have more financial flexibility and be more opportunistic as we go forward.
All right. Thanks, Rob. I did have to set you up with that one because I really love that point when you made it in the staff webinar. All right. Here's another one for you from David Rose. Why was the APO price not adjusted to $60 per share or put closer in line with the market price? And then why are there only 2 selling agents and not a wider use of selling agents?
Start with the back part of that. I think there's actually more selling agents, David, but if there's only 2, there's 2. Selling agents get to decide if they want to be selling agents or not. But I'm pretty sure there's much more than 2, David. So the price, $65 versus why not 60 if that's where the market was? Well, the market was 120 a while ago. We could have set it there. The market, somebody on the day before we priced the APO could have taken down the shares to $30. It wouldn't make sense to do that. The market is the market. And so it's not a reflection of value. It's not a reflection really of anything other than the last trade, right, or the last set of trades. So I think it's important to keep that in mind. So I think we took a look at the market. Shortly before, when we actually were setting the price of the APO, the market was around $70. The queues are relatively thin, and I think if you were looking today, you'll probably see market prices closer to $64. Again, all of those things to say, market moves around, market's volatile, market trades for a variety of reasons. Warren Buffett, Charlie Munger would say, price is what you pay, value is what you get. And if price is what you pay and value is what we get, we had the job of setting the price at a level that is attractive to new investors and is fair to the existing shareholders. At around 1 times book, the price is one that ensures that when we're doing this APO, it is accretive to existing shareholders. And at 1 times book, which is low compared to historical values of multiples that have gone as high as 3.38 times book, low compared to our market comps of our peer group in the marketplace, it's an attractive price for new investors. And if you look at the prices of the selling agents, not just the selling agents, for the research analysts that are out there, most of the prices out in the market that are put out for NCB have price targets in the $75 to $85 range. So the $65 is a discount to what people believe the intrinsic value is of NCBFG. And of course, we on the inside would have, are a little bit biased, but we probably have much higher intrinsic values than that.
All right. Thank you very much, Rob. And I've been receiving several time signals, so I'm afraid that will be the last question that we will take in the briefing. That means that the remaining questions for you, David, we will have to provide the responses through our investor relations team. And I think there was a question from one other shareholder that just came in, and which was really about how you participate, and we'll certainly provide that information as well, but the short answer is through your broker and on the Go IPO portal. That concludes the Q&A segment, and I believe will also that will also bring us to the end of the briefing. Now there is a post-briefing event, so we're going to ask you to stay tuned so that you can see what that's about. It will feature our chief economist, Leroy Gordon, as well as our EVP for Treasury and Capital Management, Tanya Watson-Francis. Stay tuned, everyone, and thanks for joining.
Hi, good morning. Thank you for joining us today as we recap the key highlights of NCB's just concluded investor briefing. I'm Tanya Watson-Francis, Head of Treasury and Capital Management, and with me today is Dr. Leroy Gordon, Head of Economic and Financial Research here at NCB. Dr. Gordon, we heard a number of key points today from our Chairman, Michael Leachin, and the executives about the prospects for NCB, and things look good. The chair spoke about the success of the focus on efficiency, customer experience, and governance, our EGC mantra. Let's talk a little bit about how these correlate with the numbers that have been presented. Today, I heard a lot about NCB's strength, scale, and market-leading franchise.
Yes, Tanya, thank you. Thank you so much. We're here to kind of break down, summarize what we heard earlier. And I heard a lot of strengths. And I'd like to start with capital.
Yeah.
Right? Capital is that portion of your assets for which you have no obligation to repay debt. And we saw where the capital of the group increased by 14%, which was significant. And capital remains above regulatory minimums, not only our Jamaica minimum, but above international standards. And that does a number of things. It allows for the group to leap on opportunities for investments and to leap on those opportunities without incurring additional debt. So it's an enhanced ability to take up opportunities. It allows, as we know as well, an enhanced ability to withstand any shock. Its capital can serve the purpose as well as a cushion for the entity for adverse effects. So the numbers have shown that there's an increased ability to do so. And the third benefit from the enhanced capital position is greater ability to pay down on the debt. so that the group can be more cost efficient and operate as such. Another key strength we heard from the chairman and the CEO of the group was on the sheer scale, about 2.6 trillion in assets. That's a lot, a lot of assets. And why is that important? Because the assets are what allows you to create the wealth. More assets, more wealth creating opportunities. And the other thing that resonates with me is not only the scale of the assets, but how diverse the asset base is. The financial group entails banking, both at the corporate and the consumer level. It entails all the card activity, payments, debit and credit card, point of sales, assets associated with insurance, general and life, assets associated with pensions, asset management more broadly through capital markets. So the diversity in the broad scale of assets is impressive, and it allows you to create wealth. So it naturally follows from capital and assets the revenue growth. We saw where net revenue grew by about 98% for the group. Phenomenal. And it appears that cash flow and revenue will continue to flow like the rivers in Jamaica. So, the other thing I'd like to perhaps ask you are your views on efficiency. We heard the chairman mention being a low cost producer. Do you want to talk a little bit about that?
Sure. So, you know, we have a dedicated focus on reducing our costs to serve our customers, and we have seen improvements in our overall efficiency, and the chair spoke about it. Our cost to income ratio has improved to 70.45. Certainly our aim is to get down to the 60s in short order. That has been driven through income growth and by our very, very strict management of costs. I think we've twinned that with a dedicated focus on improving overall experience. And certainly during the period that's in review here, we've increased the number of ATMs and improved the availability to our customers in many key locations across Jamaica. We've also embarked on a refresh of the point of sale machines to improve effectiveness. This is 60% complete, and we are working to educate our customers to reduce incidences of fraud, and are also continuing to improve our response time to the customers in respect of the reports on fraud. So all the factors are looking very, very positive at this time, Leo. Considering all the factors, you know, what's your view on the outlook for NCB's future performance?
Right. So the future will depend on the decisions that persons and companies make in their exchange of goods and services. And that's the economy, right? So the future will be based on the foundation of the economy. And I believe that there is a positive outlook in the short, near, and long term for the Jamaican economy. And you don't just have to take my word for it. You know, our international credit rating agencies have publicly done so. Our international development institutions such as the IMF and the World Bank have applauded Jamaica on the outlook on our economy. What we're seeing is that it may seem like a long future now, but in COVID, Jamaica had one of the most resilient performance and fastest recovery in the COVID period. There was an immaculate management of inflation by the Monetary Authority. They tackled that quite early on. We see where the government's balance sheet is more able to withstand unforeseen events. And in terms of our economic sectors and industries, we see where there is there's a positive outlook. For example, in the energy sector, Jamaica is poised and has created a lot of initiatives to be a part of the energy transition away from fossil fuels. We see where food and agriculture is creating ever increasing value added for the economy. We as well see all across the nation infrastructure, construction, a rejuvenation of our society, and as well general buoyancy in consumer spending. So we think the outlook is positive, and NCB, from what we have heard, provides a very good opportunity to be a part of that wealth generation. About the additional public offering, do you want to?
Sure,
make a few
I'm
points
quite
on that?
excited. I
Yes.
mean, the view is optimistic,
Yes.
and it's informed. So our viewers, of course, must be wondering how they can participate in the continued growth of NCBFG. And we've launched an additional public offering of new shares. This opened on May 6th and is expected to close on May 27. We're offering 78.5 million shares with an ability to upsize to 117.75 million. So if you want to participate, go to goipo.jncb.com. That's goipo.jncb.com, or contact your stockbroker. This is a great opportunity for you to own a part of the NCB Financial Group. Dr. Gordon, thank you for joining me today, and thank you so much for our audience who has joined us today. And have a fantastic day, and remember, participate and own a piece of NCB. Thank you.
Thank you.
If you save, pay, borrow, invest, or insure with NCB, now it's time to own a part of the NCB Financial Group Limited in its additional public offer. For as little as $6,500 in the general pool, you can own shares in the business built on strong performance and making life better for all Jamaicans. Invest in our future. Invest in your future. Offer opens May 6 and closes May 27. Apply for shares at goipo.jncb.com. Conditions apply.
Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from our investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today and live secure.